Well, Ron Insana is a CNBC contributor and senior advisor at Schroders. Kevin Landis is CEO of First Capital Management. Gentlemen, welcome. What a week it was. It was the end of the longest bull market. I know you're a market historian. The longest bull market in American history.
Yep, and it felt like it. In certain ways, it felt like 1987. In certain ways, it felt like 2008. It was a strange combination of events that drove the market down. We saw yesterday, just yesterday, some of the kind of really serious events that take place when a market is crashing, dislocations in the Treasury market, the most liquid market in the world, interventions by the Federal Reserve, now moves by the federal government to calm the markets as well. Bailouts historically have been bullish, and we may see more of those in the days and weeks to come. But I think it's probably too early to call a bottom until we really get our minds around the duration of how long we stay home. How long people don't shop, how long people don't fly. So to a certain extent, there's even a piece of 9/11 in there, that cocooning effect that has yet to play itself out fully.
Kevin, there's so much we don't know about what the economic effect of this virus and the quarantining and the shutting of events and so forth is going to mean. But let's talk about the market reaction. We certainly saw kind of a rubber band snapback. Would you anticipate that over the next 3 weeks, next 2 months, we're going to have more days like the last 2 days, big downdrafts, big snapbacks, high volatility?
Well, I think about what would cause volatility. Lots of new information flooding in. We have so many unknowns. As we resolve them, we're going to get lots and lots of new pieces of information, and they're going to be bullish and bearish. So sure, I think you should get ready for a lot of volatility in the coming weeks.
Have you been buying anything lately?
You know, we bought one stock yesterday and we bought one stock today. So
you care to tell us which ones?
Going back and
tell us which ones.
Well, that's fine. Yeah, Shopify was a great stock that had gotten away from us, and we had never owned it, and so it was on sale. And we took a small position yesterday, and we did the same thing today with Slack. We like buying IPOs below their IPO price, and Slack is well below.
And there are quite a few of those that are. Yeah.
Right, but this is by no means us calling a bottom. That would be really premature, I think.
No, I think that makes sense. I think, and right now is not the time for people to try and market time in any sense. But if there are individual stocks that you like that are selling at a discounted price, maybe there is some argument to be made for nibbling.
Yeah, nibbling I think is the right word, and averaging in. I mean, buying in over a prolonged period of time so that you can absorb any volatility that might take place, and your average cost will be lower if you do it that way. There's still some things out there that have yet to be resolved. United Airlines, for instance, said it may seek some government support. The cruise industry may do that. The energy industry may do that as well. And so we have to see the extent to which there are defaults in those areas where over-levered companies run into trouble. The levered loan market, which is now $1.3 trillion in size, is going to be a pocket of weakness going forward. Collateralized loan obligations, some of these derivative-type deals that we've seen proliferate over the last several years, Tyler, I think are going to still provide some unexpected shocks, if you will, smaller than maybe what we saw in 2008. But enough to keep the Fed on its toes and to keep the market somewhat off balance.
You know, Kevin and Ron, we had an amazing week, both on the public health front, with respect to companies canceling events. Disneyland, Universal, which is, of course, part of the NBC Universal group of companies, shutting down. The market in a spasm here. I wonder whether you feel, not that this is the beginning of the end of any of this, but maybe it's the end of the beginning of it. Kevin?
Oh, gosh, I thought I was going to hear Ron's answer first. But you know what I would say is, I guess what I'd say is, you don't know. To me, the end of the beginning would be when you see the panic really subside, and this is the last panic attack, which means this is the last piece of macro news that really shakes everybody up. Mm-hmm. And we don't know. I don't want to predict bad things.
Yeah.
Right, exactly.
No, we just don't know that.
Close your eyes and connect the dots. You can probably think of 4 or 5 really scary things that could happen, that haven't happened yet. You don't know that they'll happen, but when I wake up in the middle of the night, I can think of a few, and that tells me that we're not quite done panicking yet.
Yeah, the one thing I would say, Tyler, as we move towards next week, the Federal Reserve meets. It's expected that they were going to cut interest rates again. Now, whether or not the size of this package coming from Congress, from the president, the actions being taken in the both emergency package from the White House and the supplement, this new bill from Congress, is enough to keep the Fed on the sidelines after an intermediate rate cut and $1 trillion of liquidity provided to the markets remains to be seen. But there are expectations that by next week, the Fed will have cut another half to 1 full point. And that could also help turn the markets around. But again, no real rush to jump back in. And I think people need to be deliberative about their purchases and stick to a discipline that's been guiding them over the course of a period of years.